All right, this is just going to be a quick DeFi breakdown. I wanted to create this video because as time goes on, um, there's going to be questions, there's going to be an ever evolving learning curve in DeFi, not only within my own investing and trading career, just like how with CYPRX, when I first started this trading course material, I had the beginner, the intermediate, and the advanced section. And then as I developed as a trader and became more profitable and learned new things, I then created um sorry about that, an alarm going off. I then created CypherX 2.0 and CypherX 3.0 and so on and so forth. And so there's just going to be an ever evolving development of content that I pump out to you guys as time goes on. So that's another cool reason to just be a subscriber of the Wealth 28 Club. This video is inspired by this question right here by Dwayne in the private chat. He goes on to say, is it a good time to add liquidity if a blue chip pool volume has decreased and the APR is throttled down? Nothing fundamentally has changed about the project. For example, AVAX USDC, the APR was 300+%, but now it's around 62 with the volume decreased under TVL. So we need to understand why this is happening. So that way we don't make irrational decisions. It's better to educate ourselves on why this is taking place and then physically show you guys some examples. So we're going to get into today understanding your strategy first, what it is that you're looking to achieve in the market, because that's the most important thing. If you don't have that foundation laid, then you're going to be all over the place. And I promise you, you will end up constantly making money, losing money, making money, losing money, and you're never going to see consistent growth because you never laid the foundation. I promise you. You're gonna feel sporadic. 3 months you're gonna be making money, boom, 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 and then you're gonna hit a dark hole. You're gonna be like, all right, where the heck is all the money that I made? Why am I not growing anymore? And if you don't have a strategy, a rules set in place for you to grow your capital, you will not maintain that capital. Okay. The market will show you that it's extremely easy to make money, but it's even harder. Excuse me if you guys hear my baby in the background. It's even harder to um, maintain that capital. Okay. Then we're going to get into understanding APRs. I really want to walk you guys through what an APR actually is, why it throttles up, why it throttles down, what volume and volatility is, so we can understand that. We can get that educational piece out of the way. That's going to be a little bit boring, but it's going to be the foundation for you to jump over to technical analysis and then to understand the charts. So we
Want me to
have to.
get that screen thing, man?
Oh shit. Let me mute. Sorry. So we really have to understand the layering effect, understanding the strategy, understanding what APRs, volume, and volatility are, and then we can go into the charts and I can show you guys when are the high times of volume and volatility. When are the times as market participants that we should be looking at these things? For example, notice how he sent this message on Sunday. Today is May 26th. Okay. He sent this message on the one day where volume and volatility is the lowest out of all 7 days of the week. Okay. Now, again, I'm not like calling him out. I'm trying to show you guys how we're going to educate ourselves on when we should be looking at these things, when are times of high volume and volatility. And so that way we can better understand how to adjust our positions and when to adjust our positions. It's not just about, remember, just like how in trading, if you guys have ever gone through the CyPRX course material for trading, I specifically trade in different time increments based off of different time horizons on fundamentals and when specific sessions are happening and when in those specific sessions the more trading volume is actually taking place. So it's you have to be very strategic in these markets. It's not just a plug and play game whenever you feel like it. You have to have a strategy as to how much you want to earn, how much you want to implement and put in, and then when you're going to implement and put that money in and earn, if I'm making sense. Okay. So I just wanted to touch base on what this is going to be. And again, these are little tiny edges in the market that no other retail investor on the internet is going to give you all because everybody wants to hide their secrets. Everybody wants to just tell you that it's a magic indicator that's going to make you successful or buy their course and it's going to make you successful. No, I'm going to try to physically pick apart the markets for you guys so you can start to build a strategy like I have for myself to actually win. Okay. You're playing up against algorithms, you're playing up against mathematical magicians, okay, that play off of a strategy. And if you think that you are just going to come in and not have one and be successful, even in DeFi, you will lose. DeFi is a investing game. Okay. Albeit, yes, it's a little more hands off. You still need a strategy. So first, let's lay the foundation. So Dwayne, I would ask you if we were on a one-on-one, what are your goals? If you're in a pool or a DEX, what's your strategy? What are your rule parameters as to when you're going to change that, when you think about exiting that? What even brought you to enter into that pool in the first place? Was it the attractive TVL? Was it the attractive fees? Was it the APR? So on and so forth. And setting yourself parameters, if those things change, what will be your exit point? So for me personally, any TVL on a pool that I look for that I want to be in has to be above 500,000. That shows me healthy. It's a healthy pool. That shows me, okay, there's confidence in this pool. There's people with money actually backing it. Albeit I could put $500,000 into a pool right now if I really wanted to. But at the end of the day, it just shows me that there's confidence in whatever pairs that I'm looking to provide liquidity for. Then for me, because I'm trying to accelerate the growth of my portfolio between when I started it 2 months ago and where I'm trying to get it by the end of this year, my goal is to always be in pools that offer me 200% plus. If at any point in time the pool throttles down below that, I don't really care what time of day it is. I don't really care if the volume and volatility in the market, it's on a Sunday. For me, that violates my rules if it throttles down below 200. So when my rules are violated, that then gives me the green light to make considerations to adjust my portfolio, which I recorded for you guys live last week. If you guys haven't gone back and watched that, again, it's just kind of showing you all how you are right now in the real trading and investing with someone who at the same time as you is showing you all how they are winning. Okay. So I'm not trying to make this stuff up. I'm just trying to show you guys. Um, so for me, anything below 200% violates my rules. So that doesn't lead me to making an irrational decision and jumping into another pool. No, now I have to take some other things into consideration. If I move my funds around, will I experience impermanent loss? Am I okay with impermanent loss? Last week, fortunately enough, when I moved my position, it was not an impermanent loss. So that for me was a green check to say, okay, my TVL's the same, but APR's throttled down past my breaking point. Now, am I in impermanent loss or not? No, I'm not. So all those three checks gave me the green light to say, okay, now I can move this capital somewhere else that's making me more money. If I was in permanent loss last week, I would have needed to calculate how much impermanent loss, and I would have needed to okay, $100, I'm okay with losing $100, but $500 in permanent loss, I think I might hold this position because I believe in the project and maybe TVL's just throttled down and maybe the price of the actual token or project itself will come back up over time. And obviously, of course, I mentioned to you guys that right now I'm in full and wide range liquidity pools, so setting ranges doesn't really apply to me. So I have the option if I believe in the project long term to hold on into the pool until, some other situations arise. But then you have to obviously, of course, take into accountability that if you think the project is going to come back up into your favor and take you out of impermanent loss, that could not happen. So you have to adjust for that mentally as well. Okay. So anyways, I'm just trying to walk you through strategy. Make sure that you guys have a sound strategy. Make sure that you actually understand what you want to see in the market, what you want to get from these pools that you're in. So that way you can set yourself parameters. So when questions and situations like this arise, you know what to do because you have a sound list. You have a rule, right? Whether that's you put it on a whiteboard, whether that's you type it out, whether that's you write it down, get it on a physical format so that way you can print it out, hang it on your wall. It's a reminder. It has to constantly be in your face at first when you're in the markets. For me, you guys see how I'm wrapping this off the top of my dome. That's because I've been an investor and a trader almost for 9 years now. So it's implemented into my brain. For you, in the early stages, even as an intermediate, you're going to make mistakes if your rules aren't there because in the moment you might not be able to control your emotions and you might make irrational decisions and then go back and look at your rules and be like, damn, hold on. Okay. So always have them there, whether it's physical, on a whiteboard, wherever. Okay. I encourage you to do that if you haven't already. All right. So once that's out of the way, because I don't want to just take too much time. Like I said, I got another call with you guys in a second. So first, understand your strategy. For Dwayne, again, you need to set yourself some parameters. Does this violate your rules? If it does, okay, what's next? What's my exit plan? Do I have an exit plan? If it violates that exit plan, or is in the parameters of that exit plan, am I going to experience a permanent loss? If the answer is no, boom, consider moving the capital. Remember, this game that we're in right now with DeFi is to take advantage of these high APRs. Again, not risky plays that you guys know I don't like to mess with meme coins, the meme coin niche, but the higher APR plays with blue chips like Arrow USDC or Virtual Wrapped ETH, right? Virtual just put out a post today that I posted in the chat where they're making positive developments and they're offering like 300% plus APR and have been constant with that, and haven't really throttled down. So you just have to make some considerations and understand that right now in the early stages of DeFi, while we have the advantage of these higher APRs, in my personal opinion, again, it's not financial advice, it's what I'm doing. I'm taking advantage of that because what I think is going to happen over the next 2 to 3 years is that when these financial institutions come in and more volume and volatility comes into the market, these APRs are going to throttle up very significant, but at some point in time, they're going to stabilize. And when regulations really come in, I think that they're going to stabilize well under 100 to 200%. I don't think that once all the money comes in and all this happens and the future is set and sound, that normal people are going to be able to make 400% APR, right? I just don't think that they're going to allow that. So I think they're going to throttle. So our goal right now is to catch up with that. So that way, when we have $500,000 of capital, we're okay with earning 10% APR on that. We're okay with earning 20%, 40% APR on that because we have $500,000 of liquid capital to deploy, right? So lower APRs are still very significant. That's still retirement money right there. Okay. So that's my goal. Again, that's my projection. If it happens, cool, so be it. If it doesn't, great. Then we continue to get high APRs anyway. So either way, it's a win-win, right? It's a win-win mentality. So let's understand these APRs real quick. Let's go into detail on this. I'm gonna finish typing this out for you guys. I was just typing it out this morning, and when I was typing it out, I'm sitting there and I'm like, okay, why don't I just do a physical call on this? And then I'll put this PDF for you all once I'm done editing it and slapping the logo on into the Discord so you can go back and you refer to it later. Okay. So understanding APR fluctuations as liquidity providers. And then after this, we're actually going to jump into the charts and I'm going to show you guys one of the best times to be looking at, your APRs, when you should check them, when you shouldn't check them, or when you should just be taking a break from the market and not really paying attention, just like in trading, right? We're not going to go in and try to place trades on Sunday. Why would we do that? Nobody gives a fuck about trading on Sunday. You go look and you backtest all the volume and volatility on Sundays. 90 out of every 100 days is going to be dead volume, dead volatility. Nobody's in the markets, nobody's trading. And then boom, the next day, Monday, you're going to see spikes in volume and volatility because everybody's coming back to the markets, right? So on Sunday, should you really be in a market participant? No, not really. Just like everybody else, right? We want to follow the ways of the market. We don't want to try to force things. So I'm going to try to pick apart and actually show you guys Asia, London, New York session, go over when the times of volume and volatility usually pick up, looking at the weekends, and that way you can eventually hopefully create a strategy for yourself, just like I have. Okay. So let's just cover this PDF real quick. So understanding APR fluctuations. I'm going to read some things. I'm going to not read some things. As a liquidity provider in AMM pools on DEXs. So as a liquidity provider and automated market maker, pools on decentralized exchanges, you may notice that annual percentage rates, APRs, which are different from APYs, fluctuate. These changes can be confusing, especially during periods of low volume and volatility. So to understand why this happens, let's delve into the dynamics of volume and volatility and how they impact APRs. So what is volume? Volume refers to the total amount of a specific asset that is traded within a given time frame. Okay, that's important. We need to understand that. Remember how I mentioned in my trading and investing career, I've built a strategy around time. Okay, time is man-made, and these market algorithms, they understand time and they benefit from it. That's why in the CYPRX 3.0 content, I teach you guys to trade in 15-minute intervals because these banking algorithms on their balance sheets and when they're getting audited want to have a clean, even rap sheet to report. They don't want numbers all sporadic. They would rather look at zeros than 1, 2, 8, 9, 7, 6, 4, 5, 0, 0, 6, 8, 3, 2. See what I'm saying? They would rather look at flat round numbers rather than a whole bunch of sporadic numbers. And so what you'll come to find out is they feel the same way about time. They would rather make a trade at 5:30, 5:45, 6 a.m., 6:15, 6:30. So it's even when they're getting audited on their balance sheet, right? Their orders in the market rather than 5:37, 5:23, 5, I don't know, 29. You see how it's not even, it doesn't look good, right? Doesn't make it easy. Okay, so when you understand that, right, that's where time it comes into play. Time is important. So anyways, um it is a measure of the level of activity and interest. Higher volume indicates more trades and higher liquidity, while lower volume, obviously, of course, suggests fewer trades and lower liquidity. What is volatility? Volatility refers to the degree of a variation in the price of an asset over time. High volatility means that the price of the asset changes rapidly and significantly, while obvious, of course, the opposite, low volatility indicates more stable prices. Okay, so high volume and volatility and how it affects APRs. So increased trading activity. During periods of high volume and volatility, more trades are happening. This means that more transaction fees are generated for the liquidity pool. Higher rewards. So since the liquidity providers earn a share of the transaction fees and increased trading activity then translates to higher rewards, as a result, these DEXs tend to throttle up the APRs during those times, right? You're not going to see that on the back end, and they're not going to tell you that. They're not going to tell you that Monday morning, when you go and you look at peak hours during New York session, your APRs are going to be freaking 400%. They're not going to send you a message and tell you, well, on Sunday, 6 p.m. Asia session, when nobody's trading the market, your APRs are going to be sub 100. They're not going to tell you that. It's our job as retail investors to know that. Okay. Low volume and volatility, obviously, guys, I'm not going to beat a dead horse. During periods of low volume and volatility, there are fewer trades occurring. Okay. So that means the volume of volatility is going to throttle down. That means these DEXs, why are they going to continue? Why are they going to continue to pay you 400% APR when nobody's trading? Right? They're going to throttle that down. Okay. This is all still a game and we have to play it. Right? They're not just going to, they don't want to just give you 400% forever. Of course, there's going to be some fluctuations. So let's get into the importance of understanding volume and volatility. So experienced traders and investors, this is important because this is how you can tell the difference between an experienced trader and a novice beginner trader. What you'll notice is when you come into the market, beginner traders, individuals, especially in the trading game, individuals, especially taking trading challenges, and gurus that don't know what the fuck they're doing will tell you, stay away from high impact news. Don't trade news events, right? If you've been a trader, how many you guys know that I'm correct? You know exactly what I'm talking about. There are mentors out there, there's videos out there, there's prop firms out there that tell you not to trade news events. That is incorrect. You should educate yourself on how to properly trade news events because news event fundamentals bring volume and volatility. And real experienced traders understand that volume and volatility bring opportunity. Without volume and volatility, there would be no opportunity in the market. Therefore, us as manual retail investors on the opposite side of the algorithm would have no opportunity to participate in trading or investing because the volume, the money would just be flat. It would be dead, right? And so you need to understand these things, all right? So I wrote down for you guys just some key vocabulary like liquidity, price discovery, profit potential, just understanding that high volume and volatility, it obviously, of course, does two things. It expands your potential for profit, but it also increases your risk, right? If you don't know how to handle high volume and volatility, then you could get caught on the wrong side of the market and experience the opposite side of profit, which is really bad loss. Okay. So you need to take that into consideration, which is why you need to educate yourself and pay attention to the things that I'm layering for you. Okay. So I wrote last, and this is the last thing I'll talk about. Just to succeed as a trader or investor, it's crucial to learn how to identify and capitalize on periods of high volume and volatility. All right. So this is what we're going to get into on the charts. So first, market analysis, using technical analysis and fundamental analysis to understand market trends and periods of high impact and increased activity. Okay. So what is this going to require us to do? This is going to require us to stay informed. This is why I give you guys news fundamentals. This is why I break down the markets for you all. This is why I try to teach you all how to understand risk on, risk off. Okay. Because we know, especially as liquidity providers, if the market's selling off, right, that means our APRs and our positions tend to throttle down. Inversely, if there's a risk on market mood, our APRs tend to throttle up, the market turns and flips bullish, and our prices and our profits appreciate in value. All right. And you need to understand that. So we got to stay informed, keeping up with news and events that impact the market, such as economic reports, regulatory changes, and major announcements on the geopolitical forefront. Time zone recognition. Okay, this is, again, a layering effect. Everything I do for you guys at CYPRX, you have to understand I layer it. All right, we play chess, not checkers. We're here for the long term. We're here to create a strategy. We're here to be educated. So time, recognizing the patterns of trading activity throughout different times of the day and week. For example, markets often experience higher times of volume and volatility at opening and closing hours, right? I've tried to give this analogy before that these market makers are just like you and I, these people that work at bank and financial institutions that actually build these algorithms and make them work. Go look at some of the videos that Usman's watched. I'm not making any of this information up. It's all available in the CYPRX Discord. Okay. They put on their pants and their shoes and they eat their breakfast in the morning. Think about it like you're in New York. Okay. Think about you're in New York session. You're in the heart of New York. These bankers, these individuals that run and operate these algorithms that actually go to the physical bank branch and are part of the system behind the scenes because they exist. Okay. They wake up 6 o'clock in the morning, 6:30. They put their pants on just like you and I. They eat their breakfast. By 7:30, they're heading out the door. They're driving to work. They get to work 8:30. Boom, they're sitting at their computers doing their thing. That's when you'll notice news starts to come out. That's when you'll notice volume and volatility starts to pick up, right? Then mid-session, what do they have to do? Take a lunch break. They pass the money over to the algorithms and it just does its thing. They go on their lunch break. They all go eat. They go freaking enjoy coffee. You can literally watch movies on this. They take breaks. Well, you'll notice that during peak lunch hours, when the vast majority of individuals are on lunch break, volume and volatility dies down. And then when they get back from their lunch break, they start placing and making trading decisions again. And so you'll see at the end of the session, volume and volatility pick back up, right? And that's what I meant here in this area, right? During opening and closing hours. All right. And when you understand this and how it correlates to the charts, trading becomes so much more simple for you because you're not making sporadic decisions based off of random price points of interest. You're making decisions based off of time because you can see it in the market. All right. So I'm just going to use this as an example today, and you guys can go and back test this for yourself and just look at peak days of volume and volatility. First, you're going to need I don't trade with this indicator, but just for this scenario, you're going to need two indicators to do this. Okay. You're going to need the SFL session opens tool. All right. So you're just going to come up here. You're going to click indicators. Give me a second. Let's expand this. So you're going to come to this drop down menu. You're going to click indicators. Sorry, excuse me. Let's find it. Oh, it's because my thing's not expanded. All right. So you're going to click the indicators tab right here. And you're going to search SFL. And you see right here, it says SFL session opens. You're just going to add it. All right. And then you're going to need the volume. Just a regular volume works, nothing extra, just regular volume. All right. For SFL session opens, I'll just show you guys my settings real quick so you can copy them. I have Tokyo session opening at 9 a.m. their time. London session opens at 8 a.m. London time. And New York session opens up at 8 a.m. New York time. All right. And then you can go in and you can change the colors yourself or whatever. Okay. But so anyways, now let me just show you all. So today, Dwayne asked, is today a good day to think about possibly changing my position because the APR throttled down from 300% to 62%? So if we go look on the weekends, just as an example, okay, looking down at the bottom of my screen here, you can see that the volume is relatively flat with only a couple of different price spikes, two price spikes throughout the entirety of this weekend, Saturday and Sunday. Albeit, yeah, okay, there was some significant price movement for trades, but we're not trading, right? We're attempting to earn fees off of being liquidity providers. And so if there's no volume and volatility during these two trading days, then we're not going to be earning a lot of fees and a lot of APR. And so today on a Sunday, when he asked this question, if we go look next week back on the volume and volatility, there's most likely not going to be a lot of volume and volatility today, right? If we go and we continue this, we can see, and just to see, okay, look at midweek. Okay, so this is from weekend to weekend. Okay, we only saw 2 price spikes in volume this week that we just looked at. Now look at this. Look at all the volume. Boom, 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 all throughout the week. Boom, 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 boom. Volume has increased significantly. All right, this is all trading activity during the week. You can go look at another weekend. All right. We spread this out, we move this down. You can clearly see no volume and volatility. There's 1, 2, 3, 4 price spikes of volume and volatility. Everything else during the day, flat, flat, flat. So imagine if you went to make a decision about moving your money this weekend, you'd be like, I'm not making any money. But in reality, you're just looking at your position on the weekend when nobody's trading. So you're not earning money anyways because everything's throttled down. Right. So I'm just showing you guys this to give you an advantage because maybe you just want to take Sunday off. Don't be looking at your position on Sunday to make decisions about moving your money based off of APRs on Sundays. All right. So now let's get into specific positions. So when does volume and volatility usually pick up? All right. We're just going to be looking at our session indicators. Okay. Let's just first understand the manipulation window. So the manipulation window usually takes place from 5:30, that said trading session. So 5:30 in Asia, 5:30 in London, and 5:30 a.m. in New York. You're going to have to correlate that to whatever your trading, window is. Okay. To 3 a.m. So 3 a.m. to 5:30 is usually the manipulation window. It's a 2.5 hour window. That's usually where from session to session, the previous session is closing, the bankers are going home, they're driving home for the day, and they're rolling over everything else to the next session. It happens during Asia, happens during London, and happens during New York. And what you'll notice is that the volume and volatility usually tends to pick up because the algorithms are trading more frequently there and creating liquidity traps, right? So you can see here, beginning of New York and the manipulation window, volume and volatility picks up and increases. Then towards the end of the day, rolling back into New York session, the volume and volatility increases. You can go look at the previous day, right? Same thing, beginning of the New York sessions, beginning of the London sessions, volume and volatility picks up and increases, right? So on and so forth. So the most of the trading activity happens at the beginning of the sessions. If there's going to be trading activity, it tends to happen at the beginning of the sessions, the end of the sessions as well. But by then, again, as investors and as traders, do we really want to be involved that long in the market, waiting 8 hours for the end of the session, sitting there all day? No, for me personally, I don't want to do that. So you're going to be looking at the beginning of the sessions. Okay. So if you want to go check your position and whether you should be getting out of it or not, go look at it during a time of high volume and volatility to make a decision. Okay. So that way you're not looking at your position during times of dead volume and volatility, thinking that your position's not performing well, which if it is, again, if it violates your rules, and even on a Sunday, like I mentioned, I still got out of that position, but that's because I laid a foundation for myself and it violated one of my rules. All right. So anyways, I hope that this video breakdown helped you guys out again, because, we're going to get a lot of new entrants into this community, which is great. It's dope, but we want to be making money. We want successful individuals in the CYPRX community. I don't just want to give you guys content, and not ever forever evolve it, right? Not forever give you guys more knowledge and more edges in the market. So anytime that I can come up on something like this where you guys ask a question, I'm like, oh, okay, I could try to explain that better for them. I will commit myself to doing that. You guys know I'm busy, but when I have time, like right after this, I'm going to set up a Zoom call for you guys for the fundamental breakdown. Just constant feed of information, always trying to grow as a community. And the people that are really tapped in will soak this up and you guys will constantly learn and grow from it. And I will see you all develop and you all will continue to grow with me. And we're going to continue to freaking slay these markets because at the end of the day, it's not hard. It just takes some elbow grease. All right. So today, honestly, Dwayne, I would wait until tomorrow to make that decision, especially if you're not in any impermanent loss. I would wait till tomorrow, till trading volume and volatility picks back up. Again, that's just me. It's not financial advice. Um, and his specific question was adding liquidity. Again, maybe just potentially look at adding that liquidity temporarily to another pool that's offering higher APRs. That's not concentrated, that's wide range. So that way you're mitigating impermanent loss. Or even while you're waiting around too, if you have liquidity right now, okay, this is another little tiny gem. If you have capital right now sitting on the sideline and you want to get involved, but you don't want to get involved with impermanent loss, remember in the strategy section in the DeFi education, I talk about this. You could get yourself into some stablecoin pairs where the risk of impermanent loss only arises under the stablecoin depegging condition, where, you know, there's obviously, of course, that mentality that everybody has that USD Tether is going to collapse one day. So, you'd be taking on that risk. But if you go and you can find some really good stablecoin pairs like USDC, USDT that offer 40% APR, it never throttles down, it never throttles up. It's very consistent, right? So you have those options as well. Anyways, blessings to you guys. Are there any questions before we hop off here today and I end the Zoom call before I get ready for the next one?